Hello and good morning, ladies and gentlemen. Here with Martin Penniff, Chief Account Executive and Trading Analyst, GDMFX. Welcome to today's European Session Market Outlook. As usual, we kick it off with the North American markets and what happened last week on Friday. The Dow went 24 points up, the Nasdaq almost 50. Dixie is up almost 0.5%. Last Friday, the NFP 1,000 worse than expected. The unemployment rate came as expected, 5.4%. The average weekly hours reports as expected. The average hourly earnings year-on-year 0.1% higher than previous. The average hourly earnings month-on-month were than expected by 0.1%. Wholesale inventories 0.2% contraction. In Canada, unemployment rate 0.1% better than expected. Participation rate 0.1% worse than expected. Net change in unemployment 24,700 worse than expected. Housing starts year on year 0.2 points worse than expected. The dollar lost ground against the currencies of every developed nation except New Zealand last week. The sentiment was lifted by non-farm payrolls data, which pointed to pace of employment growth that was healthy enough to suggest that the economy might be on solid footing, but not so much as to quicken the first Federal Reserve rate hike. For today, we have the labor market conditions index and the 3- and 6-month bill auctions. On Wednesday, we're going to see the retail sales reports. Moving to the European markets, the DAX went 180 points up on Friday. The French CAC 40 120. The euro-dollar, fourth consecutive day of declines, 190 pips till now. The Eurogroup meeting starts today, and the economic and financial ministers meet tomorrow. The meeting is due to begin tomorrow. No events in the European agenda for today, so we'll let it go. The UK markets, the FTSE 100 gained 150 points on Friday. 100 points gap we saw there and closed above the 7,000 mark. After the surprise majority win by David Cameron and his Conservative Party in the UK, and after the markets have calmed down, the dust is starting to settle down and the picture is getting clearer. The Bank of England will be coming onto the stage after the election quiet period. Interest rates will be announced with no surprises expected there. However, we will closely look at the industrial and manufacturing reports this week, as well as Mr. Carney's speech. With economic recovery showing signs of a cool down and inflation at a record low, it will be interesting to hear what the Bank of England is planning to do about it. Today, we have major reports. Bank of England asset purchase facility is what we're going to see today. Also, interest rate decision. Industrial and manufacturing production reports are due tomorrow, along with the gross domestic estimate report. Quarterly inflation reports, employment and unemployment, along with Mr. Carney's speech. All of those will be expected on Wednesday this week. Moving to the Asian Pacific markets, the biggest event from the weekend, China's central bank cut its interest rates for the third time in 6 months on Sunday, trying to stimulate the economy. The economic data compared to the previous year for the same period is almost identical. This is due to the monetary, fiscal, and administrative loosening and was somewhat expected by the traders. With regards to the Japanese yen, it was down versus all of its major rivals except the British pound, where it gained strength. We are going to see the foreign reserves for the month of April today. Tomorrow, we have a few Tier 2 events, leading economic index, and also coincident index are going to come tomorrow. And another tier 3 event would be the current account for March. Trade balance is also due tomorrow. On Wednesday, we have the biggest event there, which is the gross domestic product quarter on quarter for the first quarter. Moving along to the New Zealand reports, the credit card retail sales reports came out month on month, 1% worse than previous and year on year better than previous. Tomorrow, the RMBZ financial stability report along with Mr. Willer's speech are due. With regards to commodities, the S&P 500 index had a range of almost 30 points on Friday, ended up positive at 2,100 and over. Gold had a range of $12, trading at 1,190 now, ended on a negative. Silver had a range of almost 30 cents. The oil had $1.70 range. Basically, the rally in the crude oil is reviving the U.S. shale boom, threatening speculators who are the most bullish on prices since July. Money managers also increased their net long positions in WTI by 3.9% in the 7 days ended May 5th. U.S. Commodity Futures Trading Commission data is showing the reports. The natural gas is trading at 2.88 at the moment, opened with a gap of 5 cents, range of 16 cents on Friday. Russia is also extending China's gas partnership. Also, crude futures were a little changed today as moves by China to bolster its flagging economy failed to instill confidence that oil demand in the world's largest economy, energy consumer, would improve quickly to absorb the global supply glut and lift the oil prices, of course. That was all from me from today. Thank you very much for your attention. I wish you a successful trading. Cheers and bye-bye.